We talk about something that every entrepreneur has to deal with, every investor has to deal with. Taxes is a knife in the heart to your wealth. It's not just what you earn, but it's what you keep and how you can give as little money legally to the IRS. Because one thing is for sure, the amount of tax that you pay ultimately depends on whether you are uneducated or educated about the system. Get someone who does understand tax strategy so that you're not leaving money on the table and sending it all to the IRS. When you work with the right people, it's not an expense. It saves you money in taxes, which then enables you to grow your business, your portfolio, your life. The second piece to this is making sure that you have proper bookkeeping. Proper bookkeeping will mean everything to your tax bill. It is the lifeblood of your business. Start to listen what the numbers are telling you. Sooner you do this in your business, the faster you learn this and develop this habit, the easier it will be to grow and scale your business. That's why reducing your taxes and keeping more of the money you make is a wealth habit that you cannot ignore. Hey guys, welcome back to another episode of the show. I'm so glad that you are with me today as we talk about something that every entrepreneur has to deal with, every investor has to deal with, every person in this country has to deal with as we come to close not just a month, but the third quarter of 2023. So depending on when you're listening, this still applies, but we are coming into the last quarter of the year. And it's important as we go into this last quarter that we have a few things in line to understand our business numbers, what exactly we're bringing in revenue-wise, and also how much we're going to owe in taxes. It's not just what you earn, but it's what you keep and how you can give as little money legally to the IRS. Because one thing is for sure, the amount of tax that you pay ultimately depends on whether you are uneducated or educated about the system and who you're working with, because you can learn all of these tax strategies, know all of the loopholes that are legal, but if you're not working with someone that understands how they work, they won't use them and they'll tell you that it's impossible for you to use them, which will result in you spending far more money in taxes than you need to. So people who know me know that I nerd out on this stuff and have been obsessed about giving as little money as possible, humanly possible, legally possible to the IRS, because the point is this: the difference between a moderately successful entrepreneur and a truly wealthy entrepreneur is how much attention they pay to their numbers, how much they bring in, but more importantly, how much they keep so that they can pull money out of their business and create more assets that generates more cash flow. Because otherwise, if you're not building a company that you can eventually exit and you're building a business in which you have a job in, the only way that you're ever going to be able to stop trading time for money is to create additional assets outside of the business that generate cash flow. And the easiest way you can do that is by using your business as a machine to increase profitability so that you can pull those profits out and start to diversify in other investments. I work with a lot of very talented, very successful entrepreneurs, and so often they will see their revenue go up and their expenses go down, and they think, oh my gosh, my profitability is higher than it's ever been before. I'm rich. But you're not going to be if you're not smart about taxes and who you work with. Ignorance about taxes is something I commonly see. Otherwise, successful entrepreneurs bleed money out of their bottom line. And next to bad debt, taxes is a knife in the heart to your wealth. You know, and it's funny, people always say, like, how did this whole thing start? How do we have a tax code that would take the average person months to read, let alone understand and consume? And it's funny, when I was doing a lot of research for Wealth Habits, I stumbled across how taxes started. And the first federal tax was actually created in 1861 to finance the Civil War. And you know what's so funny? I bet way back then they probably told them that it was only going to be temporary to fund the war. But here we are all these hundreds of years later, and now we have a more complex tax code than ever before. When it started out in 1894, Congress established an income tax rate of, get this, 2%. And then it was overturned by the Supreme Court. 1913, states ratified the 16th Amendment, which granted Congress power to tax personal income. And shortly after, the Bureau of Internal Revenue, the IRS, was created and released its first income tax form, the 1040. And for the last 100 years, that 1040 has modifications and complexity and changes, creating such difficulty to prepare and file returns. And back in 1913, you could print the entire U.S. tax code on a single page. And now, over 100 years later, 110 years to be exact, you could print it on, get this, you would need a case of paper, as it's 6,871 pages that contains more than 4 million words. The reason I feel this topic is so important for me to teach and to help you understand is because the average American, let alone the average business owner, and especially in the beginning, doesn't have the resources to hire a full-time tax strategist, accountant, or controller, nor do they have the time to research and digest all of those 6,800 pages of the IRS code. But massive billion-dollar corporations do. Corporations have the time and money to squeeze every single dollar out of a deduction and loophole, as well as leverage the tax law with lobbying dollars. And quite frankly, I could go on and on and on about taxes, but I want to make sure that I give you the information and I don't lose you in the weeds. So my goal is to do it in very plain English that's super broken down in order to understand, because if you understand, you can implement it. And if you implement it, you're going to save money, which will enable you to be able to create more assets, which will then in turn create more wealth. These strategies and principles do not take place of the role of a tax strategist or a tax preparer in your business. A tax code and tax laws change constantly, and every single person's position and situation is uniquely different. But the more you know, the more you can make intelligent decisions on your tax planning and better decisions on who to hire in order to help you. Because if we are this far into the year, when you listen to this and you haven't already sat down with your tax strategist several times this year, if you haven't gotten a pre-tax estimate of what they think that you're going to be owing at the end of the year and what you're on the hook for come April, then you are already behind the 8 ball. You should always be doing taxes in a proactive way, not in a reactionary way. And as you probably know, this is what I do with my partners at Valid Advisors. And if you don't want to work with us, of course, that's fine. But get someone who does understand tax strategy so that you're not leaving money on the table and sending it all to the IRS. This is so important. I don't care who you work with, but the more you know, the less you end up paying. So if you're not working with someone who is savvy and constantly educating themselves and updating themselves on the new tax laws and codes, for businesses specifically, it will end up costing you more money. And I know a lot of times people think that working with a strategist or a fractional CFO is so expensive, but it's a self-liquidating expense. When you work with the right people, it's not an expense. It saves you money in taxes, which then enables you to grow your business, your portfolio, your life, whatever it is that you're looking to do. We just had a client come in that was exiting a $12 million business. Now, he had multiple businesses and he was doing a roll-up, and his prior accountant told him that he was going to owe $3.8 million at the end of this exit. There were a lot of different things at play. And when he was surprised by the number, he reached out to have us take a look. And lo and behold, because his accountant wasn't familiar with a lot of business type taxes and the deductions that are available to us, they missed a few things. And those few things saved him $2 million in taxes. So that $3.8 million tax bill came down to $1.8 million. So this is just a real life example that because it just happened, it's in my head, and why it's so important to make sure that you are planning your taxes and not just preparing them. So how do deductions actually work? A tax deduction defined reduces your taxable income and consequently the amount of taxes that you owe. For example, if you're in a 35% tax bracket, a $1,000 deduction is going to save you $350 in tax. But if you're in a 15% bracket, it'll save you $150. So let's unpack this. Business write-offs, tax deductions, you'll hear the terms interchanged. It just relates to the purchases made that they're essential to running your business. These expenses are then subtracted from your revenue to figure out your total taxable income. The more write-offs, the lower the taxable income, which then in turn reduces the amount of tax that you owe. For expenses to qualify as deductions, they need to meet these two words, ordinary and necessary. Ordinary and necessary just means that the IRS says that this is an ordinary expense. It's one that's common and accepted in your industry. A necessary expense, on the other hand, is one that is helpful and appropriate for your trade of business. Ordinary and necessary business expenses include everything from office supplies and liability insurance to work boots and computers. Here's the thing you want to know, is that should you ever be audited, ordinary and necessary is a category that the IRS will look at when determining the eligibility of your deductions. It would be your responsibility to prove entries, deductions, statements, all made on your tax return. This is what's called the burden of proof. So remember, everyone's afraid of an audit, although less than 1% of businesses are actually audited if they're doing less than $1 million in net revenue. Should you ever be, it is your job to substantiate certain elements of the expenses to validate the deduction. One of the ways that you can do that is with the 6 P's of a proper tax deduction. This is making sure that your documentation or your physical receipts all have these 4 elements, and there are 2 extra for meals and entertainment. Your documentation should have the place where you purchased the item. The second P, point in time, the date that you purchased the item. Number 3, purchase amount, the total amount for the purchase. And number 4, the present documentation, the physical or digital version of that receipt or invoice. For meals and entertainment, you always want to make sure that you have the 5th P, person, who the expense was with. This is especially important for meals, meetings, and events. And then the 6th and final P is the purpose, the reason for the purchase. Most receipts are going to have the first 3, place, the date, and the amount. But in order to make these deductions legit, should you ever get audited, you want to make sure that you add the purpose and the person so that if you ever have to substantiate the deduction, you don't have to go off of memory and trying to think about where you were or who you were with. Now that we have those fundamentals out of the way, the second piece to this is making sure that you have proper bookkeeping. Proper bookkeeping will mean everything to your tax bill. It is the lifeblood of your business. And I know it's boring and most people hate it, but it is essential for really 5 reasons. 1, it makes your deductions more defensible to the IRS should you ever be audited and supports you in taking more deductions. 2, it enables you to really keep your finger on the pulse of your business to catch problem areas and is critical for measuring some of your KPIs and business metrics. Number 3, it allows you to prevent cash flow disasters that could inadvertently tank your business or have a down quarter or show decline. Number 4, it is essential in selling your business for attracting investors or investments or even bringing on a partner. And 5, it can help you spot any type of theft, embezzlement, or other issues in your business. So this is an important piece because business always boils down to numbers and data. And in order to keep on top of your numbers, you got to make sure that you have proper bookkeeping in place. And remember, you don't have to do the work of the actual grunt work of the data entry. Bookkeeping is a perfect example of something you can outsource to pros to free up more time so that you can focus on what really matters in growing and scaling your business. Because unless you're already at scale and you have optimized your business and you have extensive systems in place, the one role that you don't want to outsource is being on top of your business, being on top of your numbers. It's an easy way to be removed from your business while letting expenses get out of control, which then also opens you up to theft or embezzlement. Thieves, embezzlers, dishonest people in general will love people who ignore their numbers and outsource or ignore that effort because it gives them an opportunity to take without you knowing. And remember, a bookkeeper is very different from a tax strategist or a tax preparer. To use it in a simplistic way, a tax strategist is going to be the one to share how you can use the Augusta rule or Section 179. Your bookkeeper is going to make sure that they have the data in place for your tax strategist to take that deduction on your taxes. Now, if you've read my book, you know I go into depth in chapter 12 about all of the different deductions that you can take and the ones that most business owners miss. We talk about S corporations and how to keep them legit. We talk about how to put your kids on payroll, how to set your kids up to be millionaires with as little as $60,000 out of pocket, how to leverage cost segregation studies, stacking Section 179 with Section 168, plus how to actually minimize real estate and portfolio gains with things like the 1031 exchange and opportunity zones. It's all unpacked and covered in there, far more than I can ever put in an episode. So if you haven't got a copy of the book yet, head over to Amazon, Wealth Habits by Candy Valentino. Last I saw it was on sale. So grab your copy. And if you want someone to look over your taxes and you're currently doing at least $500,000 in revenue, you can apply for a free review at vallardadvisors.com. My team will take a look at your prior tax returns and see if there's anything that you were missing or things that you could have leveraged better to pay less in tax. And as we come into this third quarter, starting the fourth quarter of the year, if you haven't done your State of the Union meeting, this is your reminder. Take out your calendar, find 2 hours in your month and schedule your State of the Union meeting. The first thing you want to do after you schedule that appointment with yourself is to prepare and print 3 critical business financial statements for if you have investors, as well as your bank reconciliations, your income statement, your cash flow statement, and your balance sheet. Your business credit card, any bills or loan payments that you might have. Next, you want to prepare and print any of your point of sale, POS or CRM reports, the system or the service that you process to keep track of your sales, as well as any corresponding customer or employee data that you might use. The goal of this is to get all of the reports you need every single month in order to take a snapshot of your business. This should always be done monthly and then again quarterly so that you can review the revenue from the prior quarter and the prior year as a benchmark to see if you're growing your revenue and your profitability over the previous. And then the best part, go to a restaurant, go to a resort, go to a coffee shop, wherever, get out of the office so that you don't get distracted. Grab a glass of wine if that's your thing, or sparkling water. Turn your phone off or at least put it on airplane mode and flip it upside down and review the data. Start to listen what the numbers are telling you. Sooner you do this in your business, the faster you learn this and develop this habit, the easier it will be to grow and scale your business. And if you're an S corporation, most likely, depending on the state you're in, you need to keep meeting minutes. So this is a great opportunity to take some notes in your corporate book to keep everything for your filing up to date. Look, if you stayed with me this far, congratulations, because I know taxes, bookkeeping, numbers is most entrepreneurs' least favorite thing. However, if you can choose to change that, and if you can choose to be anything that you want in life, you can certainly choose and decide that you're going to be better with numbers. And I guarantee you, whatever you started doing in your business at one time, it was new, it was uncomfortable, it was different. You didn't feel that you had the experience. And if you haven't done the work to really understand numbers and the data and your metrics and your KPIs and really get to know what your business is doing, it will feel very uncomfortable and foreign. But just remember that it's just like a weight at the gym. You got to pick up that first 5-pound weight if you ever want to curl a 50. My whole point of this episode is this: do not leave money on the table when it comes to taking deductions. Take the ones that you can legally, have clear and concise record, keep all supporting documentation, and work with a tax pro. No one wants to pay an arm and a leg to get their taxes done, but nobody wants to pay more than they need to in taxes. One corner that you do not want to cut is trying to save a few bucks and file taxes on your own as an entrepreneur or business owner. Remember that every dollar you deduct from that taxable income is a dollar that you can keep investing, keep hiring more staff, keep growing your revenue, keep developing new products and services, and continue to build your business. That's why reducing your taxes and keeping more of the money you make is a wealth habit that you cannot ignore. All right, guys, I'm excited for you. Get to know those numbers, pay less in taxes. I'm cheering you on. Thanks for tuning in and spending this time with me. We'll see you next time.